did a song called already called Fortunate Fame. And we're all
Whenever I'm alone with you, you make me feel like I am young again. Whenever I'm alone with you, you make me feel like I am fun again. However far away, I will always love you. However long I stay, I will always love you. Whatever words I say, I will always love you. I will always love you. Whenever I'm alone with you, you make me feel like I am free again. Whenever I'm alone with you, you make me feel like I am clean again.
All right, I think it's time to open my microphone here and start to sing. Let's set the camera on. Raise it. Hey everybody, for those who don't know me, I am founder of Synthesis DeFi. I'm going to go through some questions here really quick and show you some data, some charts, and overall the visions that I have for this project that I started 8 months ago and looks like it's going to life now. Um, so the topics that I'm going to go through here, just let me check if the audio is fine.
human beings who are also with our own weaknesses.
Questions here. All right, the audio is great. All right, so I'm going to go through a brief introduction. What is my background? What is the motivation of this project? The key concepts and strategies that I'm applying to Synthesis DeFi, which, well, as the name says, synthesis. Well, I'll explain it later. And the operational framework that I'm applying to this project, right? Plus, on top of it, I'm going to go through transparency, challenges, and solutions that I've applied to the ecosystem that we have in Pulse Chain. Um, what is the long-term vision, and end it with the maybe questions session. I already have a lot of questions here that I took notes, so yeah, let's go through them. So before showing any type of data or chart or anything else to you, I'm going to present myself. Well, my name is Oliver. I've been in the trading environment since 2014, I guess. Yeah, 2014 is when I started. Um, I started crypto in 2015. It was the first few transactions I did in Bitcoin because of some stuff that I wanted to buy at the time. And of course, people want assurance of the stuff that I'm saying. And in order to share with you this information, I'm going to show you some of the few transactions I did in the past when I was starting here in crypto. So 2015, I started um, messing with Bitcoin because I wanted to buy some stuff internationally. And Bitcoin was quite easy to trade. The fees were low at the time. How much was it? $150 Bitcoin at the time. So mainly I use it for peer-to-peer transactions, right? Which is intended to be used. But then, but then now it's nobody uses Bitcoin for transactions at all. You just use USDC or whatever. So this is how I started Bitcoin in 2025. Let me share with you. So this is my account that I have from the time, just to show you that I've been in the environment for some time of some trades and transactions that I was just doing in April. It was the bottom of 2015. That was incredible. So some few transactions there from April 2000, March 2025, 2015, and April and May, and so on. So this is an example of since since I started this thing, right? This is an exchange from Brazil, which is where I'm located at. I don't use this exchange anymore because it's trash. Sorry, it's not efficient. So this is how I started in crypto. And then during this period, I went to trade in two proprietary trading firms. I went to trade in a hedge fund. These two proprietary trading firms, they were in TradFi. So at the time, we traded stocks, we traded futures in the second proprietary trading firm, and then on third, which is the hedge fund. Um, I was a trader for in crypto, right? So it was 2018, the bull run that started in 2018 with the DeFi adoption. This is when we saw Uniswap coming up, these lending protocols like Aave, and then we have this gigantic bubble in 2018 and 2020 or I don't remember if it's 2020 or 2021 when it started to go down due to I remember it started with China banning Bitcoin mining there, and the chart started to dip. So, well, this is how I started. And since this is DeFi, um, now I'm going to the motivation why I'm doing this. Since this DeFi is a project that I've been taking on for like maybe 6 years. Yeah, 6 years. It's a concept, right? Because um, I always thought about something where people could, you know, some sort of decentralized company which could be present in global assets where normies could participate on, right? Because we have these, let's say, barriers to entry uh, in assets like Berkshire Hathaway, I mean, Medallion Fund, all this stuff. You can just access them if you're out of the United States. So this was my inspiration, and during this road of trading, I started to become an algorithmic trader, and I learned about a lot about data engineering, um, data in itself, programming, and everything started to come up together during these 6 years. So, and it's ironic because in these 6 years, I was effectively leading a synthesis of different techniques and approaches to create synthesis DeFi, right? Which the target is to become a major company, not like Wintermute. For those who don't know, Wintermute is a market maker and they sold themselves to institutions, right? But a major company in the DeFi space. And the reason why I started in Postchain is because around 2020 or 2019, you guys remember that there was Celsius and there was FTX and all these companies. And at the time, um, how to call it? At the time, they were going up a lot. Like everybody knew these companies and they were over leveraging and they got smashed. But during this period, right? there was an interview that Richard Hart did with Kitco News, uh, which is an Asian guy that interviewed people at the time. So Kitco News was interviewing in this session. Let's put it this way. They were he was interviewing Richard Hart and Alex Mashinsky, right? And at the time, I had some money in FTX. I mean, I have a lot of money in FTX and sales because I got the bull run and some nasty performance profits at the time on the fund. So I saw this interview with Richard Hart and Alex Mashinsky, where he was completely smashing Alex Mashinsky at the time because, well, in essence, he was telling the same thing that we always hear about, which is have your keys, hold your keys. These guys are going to over leverage, they're going to go broke and all this stuff. And knowing the industry, I knew that in fact these companies usually go leverage it a lot, especially because they come from TradFi. Uh, Celsius at this case, they were hiring a lot of people from different banks, and usually they are over leveraged, right? Just let me share here the screen where uh, I think it's this video. If it's not this one, right? Probably it's this video here. I don't recall. No, there was a specific interview where Alex Mashinsky was present, right? Alex Mashinsky was present with Richard Hart at the time. And what ended up happening is that Richard Hart basically saved me, right? Because I had a lot of money in these places. I was trading at the time. I didn't have a lot of time to just go through DeFi. I mean, I was just trading centralized exchanges and making all this stuff. So I wasn't thinking a lot about DeFi at all, although I had some money allocated in DeFi stuff. So this is the reason why I choose Pulse Chain because on the road, despite Richard Hart being a quite polemical figure, he was the only one telling the truth. Let's be honest with this. He was the only one pointing the fingers to people and saying, "You are over leveraged. You're going to get wrecked. You guys that are listening should hold your own keys, be private." And there's one more thing. Richard Hart, he showed himself to be very smart in marketing. Showed himself to be very smart in creating a community. So when you have a developing tech like that, you need this type of figure. Initially, he was quite more polemical, and then he changed his personality because I think he went through a change for a fact, and he started to be more how do you call it? More not offline, but humility, And so I stick with it. I stick with it because I own Richard Hart 1. Because thanks to him, I removed everything from centralized exchanges. He was the only one telling the truth. And on top of that, he created PulseX, which is the most democratic asset that there is compared to the previous one invented, like Uniswap, Bancor, Aave. All of these assets, people just, I mean, this is how it works behind the scenes, right? They pay their, they pay their user, their developers, and everybody in the company with these assets. Aave, Uniswap, like they pay in dollars part of it, but some of it, like performance bonus, they pay all in coins, which end up in dumping in their community. Now, PulseX, Hex, and PulseChain, you don't have that, right? This is the most decentralized company that there is in crypto. Company, software that there is in crypto. And since it's DeFi is an attempt, not an attempt, I'm actually doing this. I'm just integrating it to the blockchain now to bring TradFi liquidity into Pulse chain. Actually, the idea is to black hole the liquidity into Pulse chain as a form to honor a favor that Richard Hart did to me in the past. And I'm going to go through the operational framework here. And I'm going to start with some questions first. which Mushroom separated for me, which is great. And thank you, Meow, for grouping everybody together. And AT1000 is really welcoming when you come to the Telegram chat. He's always welcoming people. Awesome guy too. So, right. Let me explain the main question here, which is if you enter in the website, you saw that in the website there is, let me open here the website and I'm going to reduce my screen a little bit. All right. I'm not a marketing guy, just to highlight here, although I do understand a lot of human psychology because trading is basically that. So if you scroll up on the website, you figure out here that right on the first thing that you're going to see is DeFi and real world assets yield you one token. Why? How does it feel, right? People ask me, how did they ask me? They ask me, how is the yield? How are you making the yield, and how are you making the buybacks into SYDE to provide more liquidity? And I'm going to be straightforward with this. This is my company. I make money on trading, and part of this yield, which I apply to a lot of protocols, I can say protocols like Uniswap. You have some backstop liquidity providing to exchanges. In case you don't know what is a backstop liquidity, I don't know how long are you guys been around, but FTX at the time they had a tool named backstop liquidity, right? Now the backstop liquidity is a format that whenever the backstop liquidity is a mechanism that whenever a user gets liquidated, if you provide the liquidity, uh, I mean, if the order book is not able to absorb his liquidation, right, you are ensuring that it will be absorbed by a third party, which is the backstop liquidity. Most of the times, though, the order book absorbs every single liquidation that there is. So what you're seeing here is the backstop liquidity of Binance, right? Uh, what you're seeing here is the backstop liquidity of Binance. They have a problem for it, sure. And this is the size of the insurance fund. Now, this insurance fund here is considering that, can you see that it always goes up? Because every time someone is liquidated, part of this liquidation goes through the backstop liquidity provider. This is a pot of gold. Uh, and it's one of the DeFi mechanisms that I do use. And you see that it goes down here, but it doesn't go down because Binance lost money on BTC/USD. It's just because somebody withdrew their profits, so the insurance fund reduces the balance. On top of it, there are other projects that I participate in, which is displayed right here in this part of the website, which is liquidity providing on PulseX, lending on Aave, on Injective, which is a decentralized order book network, Uniswap, Liquid. If you don't know Liquidity, yeah, Liquidity, right? Liquid Loans is a fork of Liquidity, right? And Liquidity is a decentralized stablecoin, which I deem to be the most safe that was ever created. The first version, right? Third one, the second one, the third one, I don't trust at all. But the first version is the most reliable, which makes Liquidity reliable too. And you have hacks, and this one over here, if you don't know, just it looks like Twitter, right? But it's not Twitter. Just a second here. It's Hyperliquid. No, Hyperliquid. Hyperliquid is their order book trading platform too. So they have, I'm already saying stuff to you, but they have desktop liquidity too. Um, so these are the assets that I'm mainly working at on DeFi. And on TradFi, I have some other assets. I have algorithmic algos running for me. Uh, like I have 6 algos that they trade dollar and USD, which I'm going to share with you right now. Just a reminder, I'm talking about where the yield comes from and how the buybacks happen, right? The buybacks happen because I'm profitable and I remove part of um, this performance to SYDE. So I'm going to show you some of the strategies that I do deploy in order to generate this yield here. So if you are not aware, what is it? This is, oops, let's change the screen here. Right, right. If you're not aware, what I'm going to show you right here is a platform named MetaTrader 5. Sorry, my mainly brain can only do one stuff at a time. This is a platform named MetaTrader 5, which is the one that I use to trade on TradFi markets. And over these 6 years, I've developed some algos to trade for me, right? Uh, I'm someone who loves trading, and I don't like just trading one asset, one strategy. That's not my thing. I like to create a army of bots, right? So in case you don't know, I never use a MetaTrader 5 to trade either Forex or or TradFi um, or TradFi markets. What I'm showing you here is an algorithm strategy that I do deploy for myself. And I'm not going to go into details right here. But basically, I've created indicators for myself. I've developed indicators based on patterns that I was watching in the markets. And based on these patterns, I created algorithms so they trade for me on the stock market from Brazil, right? This is from Brazil. And they are quite profitable. So what you're seeing here is it's a backtest execution of the strategy using my own indicators, right? I have these indicators in TradingView, I have these indicators in MetaTrader 5, I have these indicators in other platforms because, well, basically they are the same everywhere. So I'm just going to, you can see that there are some executions going on, some orders are being created. You see these arrows here, these are all trades going on with the backtest. And I know that there's a lot of scammers on the internet claiming that their backtest and their strategy works, but they don't know how to backtest, and usually they implement a bug in their backtest or any problem like that. So you need to be a very advanced user to know the problems that MetaTrader, all these platforms for backtesting have in order to deploy your own strategy, right? So I created my own strategy, and this is what you see in the screen going on, right? This is one of the strategies, and I'm going to share with you the results of these strategies over the past 5 years because it looks like the exchange. It looks like the exchange they just allow you to have full user data. They like it looks like they prune their data over time. So this is the chart of the performance of one of the bots that I have traded in Brazilian stock market, especially specifically the index. So you guys in the United States, you have the S&P, right? The S&P is an index of many stocks, right? And you can trade the S&P. So you're trading an index. The same goes for my strategies here. So you can see that there's a name of the strategy here. I'm just making the back test based on previous data, and mainly this is where the yield comes from, you know. So what you're seeing here is just an execution with one contract, but this thing is scalable. You can execute with way more contracts. So I just backtest with one because I really don't care about the execution. There are some nuances when you're trading live, when you're making this trading real time. But what you have here is a really great uh, indicator of how the strategy performs over time. So I've been implementing this for quite some years now, and this is one great this is one great builder of the yield that goes in each side. We are backtesting 2023. So what you're seeing here is a strategy that I've created, right? Now, I have way more strategies than that. If you look at this sidebar here, I have one, two, three. Well, they have some changes in them. So you can see here you have 6 strategies going on live, and it's in a server that runs here behind me that I built just to run it 24/7. It's not 24/7 because the stock market closes. This is where the yield comes from. And the second question is, how about the liquidity growth? Is there a plan to increase the liquidity over time? Yes, there is, and I'm doing it slowly because although there's a lot of FOMO there in volatility, this is a patience game. So uh, probably you guys already heard of VWAP. So VWAP is a tool that I use to implement liquidity. So yeah, SYDE is really affected by the VWAP. No wonder why it hit the VWAP yesterday and went back up. Um, what about the operational wallet transparency? Will the operational wallet be publicly available and visible on chain so you guys can see the deployments and everything? Yes, it will. The only thing that I'm doing right now, although you can simply see it on blockchain, the only thing that I'm doing right now before making it public is re reassuring that every cybersecurity aspect that I have is really, really secure. Because we went viral, and I know a lot of people are going to target me, and I know how to avoid any type of hacks. And if you don't know how to do that, please check a video that I created based on a community member named Azazel. I think it's Azazel, right? Which got hacked some time ago. He lost his keys, I think. It was really sad. All right. The next question here is, um, are the LP tokens created at market being burned? If not, what is the reasoning behind it? All right, so here's a misconception in the industry, right? There's this misconception that if you burn the liquidity provider tokens, it makes your oh my god, this is so funny. Let's start by let's start first thing first, right? People believe that if you burn the supply, it directly affects the price of an asset or the fundamentals of an asset, and it does not. The second thing they believe is that if you burn a liquidity provider, it's better for the asset, and it's not. I'll explain the first case before going to liquidity provider. If you go there and you burn the supply of the tokens, or even if you are a dev, right, you are the founder of your own coin, and you say, and you're not buying from your own liquidity provider pool, you're not buying from the market, you're doing it wrong. You cannot. So, for example, there is this treasury wallet which contains 40% of the tokens there for future possible implementations. Uh, if I want to add more liquidity, I'm not going to get the treasury and simply pair it with USDC because it does not impact the price. These coins never went into circulation in practice, right? Although you go there into CoinMarketCap and you see, oh, there are millions of tokens circulating, this is a lie. The only tokens that are truly in circulations are the ones that once were bought in a liquidity provider or in the market and they affected the price. Otherwise, these coins are not circulating. You cannot get a coin that never interfered with the price performance and just put it there. This is basically inserting inflation, right? In the same logic, if you just go there and burn the supply, you are not doing anything to the coin at all because these coins were never into circulation if you just burn supplies that never went to the market. Now, if you do like PulseX do, which is you go at the market, you buy it and burn, then it's okay. What SYDE is, on the other hand, now going to the second question, to the second part of the question, which is, are the liquidity tokens burned? What SYDE does is, I get part of these profits, and I just show you another strategy here while I talk, because it's going to see. Let's put it down. I'm just going to make this run while I'm talking a lot here because it's cool. So the limit should be top of it. Maybe you can reverse engineer me. Maybe you can't. I doubt you can because you don't have my indicators. So, oh crap! Where's my screen? Oh, there it is. There it is, my screen. Sorry for that. So if you just go there and you simply um, I said that if you just go there and supply and never affected the market and you burn it doesn't change anything at all. So what SYDE does is we get part of these profit generators from these algos that I have, and on top of it I have some assets deployed into TradFi. Oh, my screen is turned on. Okay. On top of it, I have some assets that are deployed in TradFi, which generates some passive yield over time. So it's really cool, right? Sure why you guys can't see the entire page. Oh, there it is. Come on, man. Oh, if I minimize the screen, it just goes, okay, 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 great, makes sense. Okay, so what Synthesis DeFi does, we get part of this profit, we buy back at the market, and we provide liquidity. In some sense, what I'm doing is every time that I go there, buy and provide liquidity, I'm protecting the people that comes from behind, that bought behind before me, right? Give you an example. One option is you go there and buy back and burn like PulseX does. But then, if someone wants to sell this token, although the price went up, if someone wants to sell this token, they can probably be affected by the lack of liquidity. Now, if you go there and you buy back this token and you pair it with more liquidity, what you're doing is of course, you're creating a more liquid asset, but you're protecting people that bought before you, and you are offering an option for them to exit at a better price without paying high slippage. So it benefits the user. Now, what is the profit that I take on all of this? Well, it's simple. I'm here to make an honest business, and this business generates revenue, and I put part of this revenue there. And whenever people want to participate in the revenue or the performance of this company, they are able to buy the token, which is an indirect proxy of the performance of the company. So, also losing track here. So when these trades happen, right? When these trades happen in the exchange, PulseX exchange, The only liquidity provider there at the moment, it's basically the Genesis wallet. So it benefits from all this volume that is being generated. Um, Now, if I just go there and remove the volume, the fees, it doesn't make it hurts the price. I'm not going to do that, right? But another revenue that can come from Synthesis DeFi, which is the one that I'm most paying attention at the moment. I just didn't turn things on because I want more people to adopt it. Is the arbitrage game. So as the price of as the price of the asset, which is SYDE, goes up over time, you guys don't get a headache listening to me because it's so much content. As the price of SYDE goes up over time, you see that the liquidity is increasing, the market cap is increasing, all that. But here's the thing, the liquidity on the other chains are increasing at the time, at the same moment. So what we did is we spread these assets into different chains, and it creates an inefficiency there. Do you see this gigantic volume here? These are Solana community users trading the token. They completely traded the token at the wrong price because their bots were triggered to trade whenever there is a massive volume going on, right? But here's the thing: these bots, they don't know that this asset comes from post chain. For them, it's just how do you how do you put? For them, it's just an asset that was created there and had volume and started to trade it, right? So if I'm not mistaken, there was about 200 makers there, while Synthesis DeFi in post chain had like it was 800 makers, which is on 800 traders or wallets trading at the time. So there is this arbitrage game. And if you want to create a reliable uh, pricing mechanism, you want to be the market maker, which is the liquidity provider, you want to be the arbitrager, and you want to be the investor, right? You cannot be the trader which buys your own coin and sell your own coin, otherwise you're just killing your coin, your token. I have no interest in that. This is a long-term project. So arbitrage will be mainly the thing that I'm going to benefit because I'll turn on the bots to keep price stable across different chains, right? Uh, the benefit of the coin itself. And this goes to the next question, which is the operational wallet transparency. Yes, you have 100% access on it. As I said, I just taking a look in cybersecurity first, and I'm hashing every single password and every stuff that I have. And the next question is the LP management. All right, I'll answer this one. Oh, now the sauce. How is the real world asset pairings going on, and how are they made in practice? All right. What I'm going to show you is probably something that people use to copy SYDE, right? But because it's a fancy word, they're probably going to use against you, like these talk about liquidity web and all this stuff. But the normie people don't understand it. How is it paired? There's one thing called which is portfolio theory, modern portfolio theory. It's a fancy name for a simple thing. There are two ways for me to explain it. I could explain the most simple way, and in the most simple way, it's so easy that it plays against me in the sense that people will just copy what I'm saying. So I'm going to give you, if you are a very good guy in research and studying all this stuff, you will understand the simple aspect of this and go to the root of it, right? Whenever you get a complex topic and you are able to make it simple, just like trading, this is mastery. You simplified something. So what I'm going to talk about here is the modern portfolio theory. In fancy words, what they say here is, where, let me see, a key part of it is diversification, right? Um, choosing optimal mix of the assets. Where is it? There's a very simple explanation here. Okay, here's the source. An alternative for the conventional portfolio is the investor can construct a portfolio with the low with this NPT, right? Possible risk that is capable of producing no return, right? Based on statistical measures such as variance and correlation. Now here comes the hardest part. An investment performance is less important than how it impacts the entire portfolio. So I apply this to SYDE. And if you want to know or understand how it is applied, you have to study. Just like I was mentored before, I had a mentor, right, in algorithmic trading. I'm not going to tell any of you what is the fish or how to fish. I'm going to tell you where the fishes are. You have to go there and study and research to make you to create to understand how do you fish, uh, have your own fish your own fish, so to speak, right? Uh, and and understand what I'm saying. But the core concept is this more modern portfolio theory. But I'll help you a little bit. When he says here about variance and correlation, what this means is there you can mathematically create a portfolio of assets that once one asset is going up, they have a negative correlation, right? Once a portfolio is going up, and I'll show you an example. Once an asset of the portfolio is going up, the other is going down, and one is trending, the one is ranging. When it's going down, the other is going up. But overall, you create this uptrend portfolio. Now, this requires constant rebalancing and adjusting because you have to adjust according to the volatility. You have to adjust because when a news hit, you can't use the same size of contracts. You have to adjust to the volatility. So there's a lot of code involved. But this is the core idea. It's a fancy name. Don't trust the fancy name. It's a simple concept, but you should get to the root of it, right? So they give some examples, but I'll give you a practical example of how I apply it to myself, right? For this, I'm going to show the performance that I have of some other strategies. Let me see if I have this. Where is it? Um, okay, here it is. Let me change the screen. Nope, not this one. Um, oh yeah, this one. So this is the performance of one of my strategies over time, right? You can see the expected payoff, the Sharpe ratio, live trading. It's another performance, right? But it's really close, and depending on how I manage it, it's the same. So can you see the performance here? Do you see these periods of ranging? So here's the thing. What I'm going to show you is how modern portfolios are applied in practice. But I'm not going to tell you how. I'm going to tell you what is the result, but not how to get there. So what we have here is the performance of a strategy, right? This is not a portfolio, this is strategy one, but it's a good example. So you see this period of ranging here. This takes 6 months. 6 months of drawdown. It takes 6 months for you to become profitable again. Now, if you take the strategy by itself, it's a good strategy, but it takes a lot of time in drawdown. It doesn't make sense to spend like 6 months in drawdown. So what you do is you integrate it with other strategies. And I'm going to show the result of this. So all these sheets here that you can see, they are the trades that the bot does, right? When you adjust the lots and the contracts and all this stuff properly, you can see here, you see this bottom line here? This is the worst performing strategy that I have. Do you see how long it ranges? Yeah, this is really bad. Really long range. This is like a 1 year ranging before a run up. Do you see this one here, which is um, oh, did I close my window? You know what? I'm gonna fix it. Okay. So you do see this, do you see the top one here? Right? This is the best performing strategy, and this is the worst performing strategy. In the middle, you have mixed strategies, right? When you group up all these strategies simultaneously uh, when you group up all these strategies simultaneously running, right? Trading every day, trading every asset that you have, you're creating diversification because the markets, they are like an engine. They are like an engine with, I don't know the word in English, I think it's pistons. When one piston is going up, the other is going down, and you have this mechanism that makes that manifests in your portfolio, right? But when you group all of them together, they become harmonic. And this is the magic, right? So this reproduces into SYDE because I take part of the profits and I put there. Where is the 6 months consolidation here? The worst case you have is a 2 month consolidation. And this is the equity curve of 6 strategies running together in different assets. The same goes if you create a portfolio of uncorrelated assets. Um, Listen, guys, I'm talking technically here because if I'm going to explain every single term, it's going to take a very long time. So um, I'm just going to keep this. So if you just go there and you put all these strategies together, they will have a positive expectancy over time with minimal drawdown. So the same goes to SYDE. I put this in a portfolio that has some negative correlation to SYDE. So when SYDE is going up, something is probably going down. When SYDE is going down, something is probably going up or ranging. So it holds it a little bit, right? This theory, this portfolio theory, goes way before Hart's law. This, I mean, Hart's law applies to DeFi, which Richard Hart named it. But this concept's not new, right? An example of that, so many topics to go on. Hopefully, well, the good thing is that I'm just going to cut this and I'll have content for an eternity, right? So I'll give you an example here that I was testing, which is currently SYDE is paired with, no, it's still running. No, no one should see this one. God damn it, where is this thing? Oh, oh, there it is. So I have to, oops, nope. Oh, there it is. So this is the X screen, right? And what we have here is, you see, I'm watching SYDE here on the side. Yeah, okay. Oh, there is an arbitrage opportunity here. Someone's trying to sell SYDE in Solana and buy SYDE in Bolstrom. Anyway, so anyway, what I'm going to share with you here is that SYDE is paired with Paxos Gold. Now I did not just a pretty pool because I was just doing my job and suddenly it went viral. But pairing SYDE with Paxos Gold is a way of creating this negative correlation on chain. And why is it only paired with Paxos Gold on chain other than Richard Hart cores? Because when crypto, when fear comes in, panic comes in, people leave crypto, people leave stocks and buy gold. Doesn't matter if you think that Bitcoin is going up or down. Bitcoin has a huge volatility, right? Uh, for TradFi. So pairing with gold is wise. I have to adjust the liquidity though. I didn't expect it to go viral so fast. Uh, but this is the idea. On top of that, there are things that runs in the back end that you don't see, which is the portfolio that I put SYDE into. And now SYDE has become massive, right? Because I was testing stuff and I was doing, and I did a lot of codes. I have the algos. I was just there doing the stuff, and it went viral and it went up a lot. And now it's a bigger chunk of the portfolio than it should. So a solution would be, oh, sell side and regulate the portfolio. But I'm not going to do that. I don't have no interest in doing so. So what I'm going to do is to allocate more part of my own portfolio to include what we have inside, right? So example, let's say that side becomes 20% of the portfolio, and it should be like 5%. Instead of going there and selling side and regulate the other, I'm going to add more money in the others, in essence, what to pair with side. You get what I'm saying? Because I was separating these things, my own portfolio and Citizen DeFi portfolio. I mean, it's all Citizen DeFi, but there's one portfolio that I take, uh, for, trading aspects and retirement and all that stuff. I'm just going to allocate more because Synthesis is a project that I'm taking on seriously, right? And I have no intention of selling side. I wanted to grow, and honestly, I created side because I was pissed. Um, I mean, it was a great impulse because I was pissed with the fact that in Pulse Chain, there's a lot of scams. People were scamming each other. Um, People were scamming each other. They were creating fake companies. They are withdrawing liquidity, creating all this stuff instead of simply building something reliable with the knowledge. I mean, that I'm sharing with you guys right now. You know, it can't be only me that knows this. Uh, and nobody was taking it seriously, except for some companies like Ocean, like Liberty, and plenty of other ones, Liquidity, right? And the community was getting divided, and I got pissed with that. I said, no, it's time to start something new here and unite people and bring people from other chains. This is why it's important to have side on other chains because when people trade there, all this volume, all this liquidity, right? Like what happened here with side in Solana. You see this? This was nobody from Austrian chain trading. This was bot being triggered in Solana. This impacts positively uh, the image of side, and side is being traded with PulseX. So whenever someone trades side, you are indirectly affecting PulseX in a positive way. Both have similar tokenomics. The only difference is that PulseX burns and side provides the LP. It should work together, right? It should really work together. As a wonderful what Richard Hart did to me, and for his transparency. I really wish he could show up sometime. Sorry, I got completely lost explaining stuff. There's a lot of content. Let me see how long have I been talking here. Oh, anyway, just keep going on with the question before I end it. So I just explained to you how real-world asset pairings are happening, how Synthesis DeFi makes money, some ideas. Of course, I'm not going to share my strategies with you all, but I have my indicators. Maybe I share my indicators. But I don't know. So people are asking when will real-world asset pairings go live, and how do they fit into the bear market yield to holder strategy? So the fact that the liquidity provider is not okay. So it's elegant. Thank you, they Seegers. Just close it. Sorry. So before I go into this, um, Well, when real world assets can go live and how do they fit? The bear market period is I make money when people lose money. In the sense that do you remember the backstop liquidity stuff that I shared with you here? Backstop liquidity stuff here. I participate in that. When people get liquidated, I make a lot of money. And I don't like to say this because I mean people are getting leveraged, they kill themselves. So pairing with gold, have it in a portfolio that has backstop liquidity. You put energy stocks in this portfolio. You put real estate in this portfolio. And you manipulate the liquidity, not in a bad sense, but you change the ratios according to the market. And I'm not saying like a day trade thing, like you look at the daily chart and you go there and say, I'm going to change the ratio now. No, it doesn't work like that. It like takes 1 quarter, 6 months to make this decision, right? You can incredibly change the result that the token or the asset has. Especially because SYDE, since it's DeFi, is the majority of SYDE, right? Like it has the treasury, all of this. It's the only liquidity provider on, so we can make these things. So at the moment we are in a bull run, right? Bitcoin is going up. Ethereum, Ethereum is going up in dominance. You just let it be. But if you look at my Twitter account, you see that I do some good calls, man. And I'm not dumbly trading stuff. And when you're going to manipulate the liquidity, you don't even have to trade. You just change the ratios, right? So when the bear market hits or starts hitting, I have some targets that I already shared in Twitter. When these targets are getting close, when we're getting close to these targets, guess what? You see the liquidity shifting from risky assets to more safe assets. So when the risk assets start to go down, which are crypto and all this stuff, uh, you barely see an impact on SYDE. Of course, this is not happening now because liquidity is low and a lot of FOMO and all this. But this is the game. And this is a proper treasury management. Um, okay, let me continue here. Okay, someone asked about do your wallet holding 40% supply. I think I said that I have no intent of using it. The reason why a wallet holds most percentage of supply is because there are some companies, let me show you here. And by the way, if you want to get some stablecoin yield, it's a great place, right? There are some companies like Maple Finance, which they are responsible for borrowing assets for, they're responsible for borrowing dollars to institutional crypto companies, right? So probably the Ethereum Foundation has a deal with Maple, example, right? And what they do is they give some of their tokens, which they probably generate from inflation, they don't care anyway, and they get a loan. And with this loan, they do anything else. Problem, this is leverage. This is really dangerous. I don't like leverage. I hate leverage, honestly, because we know what happened to Alex Mashinsky and the FTX guy, right? Not only them, but Three Arrows Capital, all the banks going leverage in 2009, and this goes on and on. So you have to take care of leverage. I don't like this. Another use case for it is a product implementation, right? If I go there and then just negotiate with a real estate or company or this and that, we can make this partnership to bond them for a period of time, like a vesting in return for some deals. Would I do it? Only if it impacts positively the price. Because listen, this is my personal thing here. It's not about the money. I really want to create this product. I love it. And I think it's missing. Nobody takes crypto seriously. I mean, there are people that does. How did you learn about Richard Hart? I already shared this. Why did I choose Pulse Chain? What is the motivation? I already shared this. And oh, what have I been working in the last 8 months, which is when SYDE went into the liquidity pools and effectively started as a token. So I was building an algo that connects via Python and MetaTrader, the blockchain, and the company account in in the stock market, right? So I'm not going to explain the pipeline because it's a lot of work, but in essence, what I'm constantly doing this algo is retrieving information from the blockchain, you convert to the local currency, and retrieve the price of the portfolio in the local currency, and you see how much is the ratio, and then it shows me to me, oh, you have to this ratio is wrong, right? You have to pair it, or to increase liquidity, or to make the ratios back come back again. So you keep it virtually bonded. And there is the order sending, which is you have to know a little bit of Python to go there and know how to send orders on the blockchain. You can pretty much find this online. There's a lot of execution problems though, which only comes with advanced um, usage of these tools to figure out. Building the cross-chain bots, arbitrage bots, which is why it takes so long to, because Solana is not a Ethereum virtual machine blockchain. Solana is another thing. So someone should arbitrage this. You see that it's 0.0014, and I'm not arbitraging that yet because I want people to do it for starters. And the script to return data. Oh, okay, let's say that. Yeah, that's it. 8 months. Because I was taking this as a monthly work, monthly schedule, but it went viral. There's more responsibility. I have to do things quickly. I think I have no other questions. I'm sorry for you guys because I bombarded you with hard information, but you should watch this video more than once to figure this out. Now, there's only one last question, which is what do you expect or hope for the community and to ensure the project's success? I think this is the best question. Um, my expectation is that we grow up together and we continue the job that Richard Hart did. He did not stop. He's still doing stuff. He just don't show up anymore. Um, because the community got lost and they got divided and they started to PvP against each other. This is not the idea. Come on. And SYDE becomes a company that comes here with a company profile to build an asset that will be that is multi-chain and bring users from other communities so they can know SYDE and they can know Pulse chain and it can affect PulseX, right? I'm sick of this division that there is in the community. It's a small community, which is impressive, right? A small community with such a big outreach. Look at what you guys did to the price. I didn't interfere in this, right? And look at the potential. No other chain does it. I mean, you have Solana that they create a shitcoin there and then pumps and dumps at the same time, but it should get more vision. Just now, like in the last month, that Pulse chain started to have a growth on the of stable coins crossing the bridge. Hopefully, we are going to make higher tops on this. This is how much money goes into Pulse chain. So we have here $48,000, $40 million on the chain, and it should go higher. So I'm not here to joke. I'm here to lead and build. I am the developer. I'm not going to spend money hiring other developers or absurd of money in ads and all this stuff. because I'm just going to build and keep the profitable company going on. And you really don't need that. You have an AI now. I myself, I do a job of 5 guys. I do a job of a data engineer, a data analyst, a data architect, and sometimes a front end job. The website, the pipelines, the structure. If you are a programmer, the Airflow, the Dockerized environment, the virtual machine running the scripts. I do all the stuff. You don't really need to pay other people, especially because they're expensive. And another thing is the evil comes to rob, steal, and destroy. And this is what we've seen post-chain. People come, they rob you, they rug pull you, and they destroy your assets in your portfolio and vanish. Take Post Latino, for example, right? So I'm not here to do it. I'm literally not here to do it. I'm going to do the opposite. So if the evil comes to rob, steal, and destroy, and if you want to know why am I saying this thing, you should check the. I'm going to share this. You should check the and vote on the right. You should check the the contract. Go there, click here, open Postchain Explorer, go to contract, and roll this thing to the end. This is all basic functions like what is the supply, what is the bounds, the function to transfer. Anyway, go to the bottom. There's a message for you. Why am I doing all this stuff? Because I commented. You see these comments? There are some comments that I did there that do not interfere the code. They're just comments, so it can be in the blockchain forever. So I'm not here to steal, neither to rob, neither destroy. I'm here to create a legitimate business that I've been dreaming of for 6 years. And I got pissed because nobody was doing it. I wanted an asset where I could trust, where I could see on the blockchain that is transparent. And although the blockchain is transparent, you don't know what the foundations are doing. You don't know what are their wallets. You don't know what they're moving. So I'm going to make a dashboard. You guys want to see all this stuff because this is what I expected when I bought a coin. In the past, I bought the Graph. Have you ever heard about the Graph? The Graph is a company that basically is a database, right? Is an indexer. It's a database in the blockchain. And look at this chart. What a shitty chart. You know why this chart is going down? They tried to, I mean, I had an interview with these guys in the past, and I figured out that they make 2 retreats per year. Do you know what a retreat is? They pay for every single employee to go to a 5-star hotel, right? With the money that GRT generated, with the tokens, let me erase my indicators. And everybody there spent like 1 week in the 5-star hotel, spending the foundation money that was paid by people who believe in the company. And they sell this GRT and pay the hotel and all the expenses, the travels. You know, I'm not here to do it. This pisses me off. This pisses me off so much because it's a company. It's supposed to generate a revenue. It's supposed to be positive net margin. It is supposed to be like, you know, mentioned. It, it is a software. It is supposed to behave as a software. It is supposed to behave like Microsoft. PolSec is supposed to behave like Microsoft. PolSec is supposed to behave like um, Google, all this stuff. Because you have, if you go here into their statements, you look at Microsoft. Do you know what it is? This is a data called diluted shares outstanding. What you see here is a deflationary state. Every single year, Microsoft removes a tiny little bit of their supply, so to speak, from the market. This is deflationary. This is what OSX is. This is what SYDE is. So this is the target. So I'm here to build, and I do not bend to money. I do not fear man, and if I was to get corrupted by money in the past, I would already be because I have plenty of opportunity to do so, especially when you're managing positions in trading for high profile assets. I mean, the bonus that they paid me was so huge, and it still left some for them because their other traders went broke in 2020. 2021 drop. I basically saved the company with my bonus. Um, so this is my story, man. I hope I could clarify any sort of doubt. Feel free to ping me in Telegram, and feel free to ping me in Telegram if you have any questions. Just hit me up there. I'm late. I'm very. Sometimes I'm not watching Telegram, and since I have to code a lot, I'll just close it and just see it at the end of the night. So I hope I could clarify any doubts. And hey, let's unite people. Bring in. We should have a chat with. Dollar, crypto dollar cost. Um, dollar cost crypto. Sorry. What is the? Oh, I love this guy too. He's so nice. Which is I forgot his name, man. X. Anyway, there's some fighting influencers there who I really enjoy to watch sometimes. So we should unite everybody. So, well, there's no other question. So that's it, guys. Thank you for watching. Feel free to rewind the video and see you next time.